Hello there, my name is Jessica. I'm here with Beta Virtual Assistants. It's been a week. It has been really interesting with Bitcoin investing. Actually, those of you who are investing in crypto, Bitcoin is doing this like wave thing. It is in a channel. Like if there was ever a channel, it is in a channel right now, and it's just waiting. It's building up momentum as it goes serpentining in this little channel. And one of these days, it's either going to go up or it's going to go down. And my bet eventually is going up, of course, but short term, who knows? Which just brings me to the fact that I don't know how many of you have heard a long time ago, there was an organization I heard about called the Fair Tax Organization. And oh my gosh, this organization makes so much sense to me because right now you have the USA income tax, IRS, and it is like they say that if they printed all the materials involved with filing your taxes and all the regulations and all the loopholes and all the benefits and all the incentives and all this stuff, it's like hundreds of thousands of pages long, and it's so complicated that nobody knows all the answers. The thing about it that I've been told by several gurus who I follow, and they say the reason it's so complicated is because the government's trying to encourage you to do different things. So they build all these incentives into the tax code so that hopefully you'll do those things. So for instance, if you run your own business, you get all these write-offs, right? You get to claim some of your electricity maybe, or you might get to claim the new printer you had to buy because you needed to print client documents or whatever. And that offsets your income. So if you can reduce your income, then you pay less in taxes. And that's great and all, but it's super, super complicated. I got a form from my brokerage and it was so thick because apparently my new brokerage, they print the tax form, and first of all the spacing and everything, it takes up pages and pages and pages, and then they printed a summary of the year's activities, which was the same information twice, and I was like, seriously, why do we need this document to be this big? It's gigantic. So it's so complicated because the government is trying to encourage you to do things like, build businesses, do real estate, because if you're owning property and buying property, that's helping the economy and all this sort of thing. So tax code is super complicated. But here's what I would love to see for the tax code, and this is basically my understanding of what the fair tax was about. And it's probably called something else by now. That was like probably 20 or 30 years ago that I first started hearing about it. But fair tax was so simple. It's based on the premise that rich people have more money to spend. Therefore, they spend more money. Therefore, the way you get them to pay their fair share is you charge them tax on what they're buying. So in this case, at the end of the year, you don't have to know how much you earned from all your different sources, and you don't have to know that you have incentives and write-offs and tracking logs, and now all the payment companies. I have like 4 different PayPal accounts, and I have to download a schedule from each of them because I've been receiving payments in each of them. Like, it's so ridiculous how much waste is generated in time, in tracking, in paper, and all this stuff, just so I can file my basic taxes. And like the fair tax would be like, okay, and probably collected by the merchants. So basically like sales tax. So at the end of the year, you say, okay, I sold this much in goods, I collected this percentage in taxes, done. Like, can you imagine that it would not be like, why does the government need to know how much you make? Because what really matters is that, I mean, if you are buying $1 million yacht, then you pay a sales tax on that $1 million yacht, and then you get the benefit, right? And then people say, well, what about the poor people? I love the poor people, I really do. Here's the thing, is that there's like, I've seen it both ways, where there's like a little bit of well, first of all, there's no tax on used items. So you buy a used Tesla, if you want to do that in this day and age, you pay less than buying a new well, you pay no taxes because the taxes were paid when it was bought or something. So there's not number one like that, but more commonly, like if you go to the Goodwill and get all your clothes there, you wouldn't pay taxes on your new to you but used clothes because they are used. And the other thing is food. Like you would not tax food. And so what do poor people need to buy the most? Well, they need to buy food and they need to buy the basic necessities. And so they would pay a little bit of tax on other necessities, like, I mean, we do need phones, I guess, in this day and age, or like if they need, I don't know, brand new shoes for school or something like that, they would have to pay a little bit of tax. But then the fair tax actually, I think, suggested some kind of like some amount that would get either rebated or pre-credited or something so that poor people could buy the basic necessities, basically. And I think that's such a cool idea because it's number one, it's like it would get rid of my business. I would no longer have a reason to collect, to spend all my time processing people's crypto transactions, except for the fact that I also love to help people get organized with their crypto so that they can put together decisions so they know where all their stuff is. So I was just in Discord this morning and somebody said, I don't like coin tracking. We love coin tracking around here. And they're like, I like Coinly because da, 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 da. And I don't like coin tracking because it doesn't show the balances in your different wallets. And I'm like, did you find the right report? Because there's this report called Balance by Exchange and it shows all the balances of all the stuff. It's like, right there, like spread out by wallet. Which brings me to my squirrel. This week I was somebody referred to, I have a compatriot in Canada who is not my partner, who does a lot of accounting for Canadians and has a YouTube channel, and she does not do crypto transactions, taxes, or regular taxes for USA. She's specializing in Canadian taxes. That makes sense to me. And I specialize in the crypto part. She actually does the crypto and the regular part. And probably the best one in Canada that I know of. And she had somebody contact her about her issues. And so she referred her to me. Well, this person doesn't understand the tax code. Like, for instance, the IRS or the government wants you to save money for your retirement. So they give you these incentivized accounts that are specialized, that are just for retirement. And here in the United States, it's called the IRA, the Individual Retirement Account. And in other countries, it's called other things. I've heard lots of, like in Australia, it's the Super Management Self-Fund or something. And the Canadians have something else that they call it. But in any case, it basically means you're setting aside money to pay for your needs in retirement. And so the government wants to encourage this, so they give you a tax break. They say, we won't tax you. If you're putting your funds into this account, we will not tax you until it comes out the other side. Retirement accounts are incentivized so that you get the tax benefit of, you don't have to report that money as earning. You don't have to report the transactions inside the account as having earnings and all this stuff. So it makes tax reporting super simple for the retirement accounts, because while the money's in there, it's either growing or shrinking, it doesn't matter. But when you take it out is when you pay the taxes. The thing is that with an incentivized program like that, the government doesn't want just anyone throwing just any money around and claiming that's for their IRA, which is what this person did. If you're going to have a crypto invested IRA, an individual retirement account, you need to have a portal where the funds go in, and where that company will report, okay, yes, Jessica put in $10,000 into her Roth IRA this year, and it came through our portal, and da 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 da. And then the government can look at it, and there's rules. There's all these rules. There's like, this kind of retirement account can contribute this much and this much, So you have to figure out all the rules, and which affects your limits and how much you can invest and all that sort of thing. Once you get the money in, so you put the money in, and it's based on what you've earned. So first of all, if you haven't earned $10,000, you can't put in $10,000. And I don't know of anyone getting caught with that part, but I know that that is a thing, and that there's penalties if you put in too much. And I've definitely done this in the past. In fact, my first investing experience, did I talk about this a couple weeks ago, where my first investment, I went into the bank and the financial advisor said, invest in this. And he didn't understand the rules that apply to retirement accounts. And so he didn't tell me that I couldn't put in what I thought I could put in. And then when I figured out later, oh no, if you put in too much, you have to withdraw it and then pay penalties and all this sort of thing. If you get the withdrawals done before your taxes are filed, you don't have to pay the penalties. You just have to like report the gains or loss. Well, you report the gains, you're out on losses. I was out because I had losses, but you can you do have to report the gains, but going forward, it's all fine. But if you don't realize that you put in the wrong amount and then later they come to you and they audit you or something and they find out that you put in the wrong amount, there's all kinds of penalties and fees and all this sort of thing. And so the first thing is you want to know the rule that says how much can I put in. Number one. Number two, you got to get it into an account that's set up and recognized by the government as providing this sort of service for you. So you have to put it into an account that is just for the IRA, for the Roth IRA, for the regular traditional IRA, but it is just for the IRA. Then, after that, you put your money into the crypto place, and maybe the crypto place doesn't have everything you want. So then people think, oh, well, I can go buy it somewhere else. I can set up a wallet and I can go buy other assets with the funds in my IRA account. And that is perfectly fine. But you want to make sure, number one, your records are really complete and straight and doing like recording this, which this person's records were not. And number two, you can't send it to an account that has personal funds in it. You have to use all the wallets and exchanges that are connected to your IRA invested funds need to be only IRA invested funds. You cannot separate them. So I'm looking at this person's account and they took funds from their IRA. They sent them to Coinbase in their personal thing because they wanted to buy certain coins that the IRA account didn't have. And then they sent them back. That is iffy. That is super iffy. And so I'm trying to help her figure this out and trying to figure out like what exactly she did. And I am just scared. I'm still mid-process at this point, but I'm scared to know because I don't really want to know. I don't want anyone coming after me. But I'm really worried that she mixed funds in her personal account that were supposed to be from her IRA. So number one, that's bad. Number two, did she send back the right amount? There's just like so much that goes into it. And like you really want to have pristine records that show, yes, my IRA funds, they may have moved around from wallet to wallet, but they were all IRA accounts. Then none of them were personal. And none of like just don't ever mix personal and non-personal, the retirement accounts. And that's true I've come across it a couple of times. We have a few Australian clients and they have this thing, the super managed SMSF fund. And there's been a couple of instances where I have clients who are not supposed to do this and they send funds, they get confused or whatever, and they send funds from an SMSF account to a regular account. And you're like, okay, here's what you did. You're not supposed to do that. So when the government is giving you incentives, you have to follow the rules for those incentives, which is why I don't like the IRS, like the whole, it should just be so much less than it is. But in any case, that is where my head's at this week because number one, I've got all this stuff I'm trying to do with my complicated taxes. And then I'm also trying to straighten out this person who really, and they were advised, well, I think one of their exchanges that they were using said, oh, use CoinLedger. So she was using CoinLedger. She let me into her CoinLedger account and it was just full of holes because there are all these funds coming in and out with the IRA accounts that she didn't have in CoinLedger. And as far as I can tell, I can't tell a way to add accounts to CoinLedger and say, no, these are IRA accounts. These are not part of your taxable accounts, which is why we love coin tracking because you can track multiple types of accounts in one software. I track my business assets in there. If I had an IRA crypto, I would have my IRA crypto in there and just not include those on the tax reports. And as long as you've kept your funds separate and the only funds going into the IRA crypto go directly into the IRA crypto and come out from the IRA crypto, and there's no breaking that wall into the personal. As long as you've got that in place, it's super easy. you have all of your IRA wallets, and then you have all of your personal wallets, and you might have your business wallets, and you keep them separate so that you can print your reports at the end of the year. And then when you print the reports, we usually tag everything that is for an IRA account with the IRA tag. And then when we run the tax report, we turn off the IRA tag. Or if you have a business, you tag everything with a business name, and then you run the business stuff as a tax report because they do have reportable transactions, and then you run the personal stuff as a tax report, and then you don't run the IRA report because that part doesn't matter. It only matters what you take out at the end. So that's where I'm at with thoughts today, is like, if you don't know what you're doing, like, especially if you want to be invested in crypto and you want to use some of these incentives that the government provides, figure out how to do it right. Figure out someone who can advise you from the beginning. Like, you do not want to put your funds in and then commingle them with personal funds, and then you get in trouble and you have to pay penalties and fines and all of those sorts of things that they threaten. And here's hoping that the government does do something about the tax code, that they do eliminate my business, because I would much rather see people succeeding with investing and not worrying about taxes and the complications of finding all the stuff and organizing it. And I've got another client pulling his hair out because his exchange that he chose to use, they sent a CSV that has deposits and withdrawals for sure, and it has some trades, but I'm pretty sure it doesn't have all the trades. So I'm like, going back to him and I say, I'm pretty sure there's like all these reward, like commission rebates listed for all these coins that he was trading, but there's no trades for the coins. And I'm like, I don't think this is right. So in any case, I would love to see my life get a little simpler, and I would love your life to get simpler. So if you have questions about crypto or investing, or you're thinking about investing in a crypto IRA, I do have a contact well, there's two ways that I can think of to do it. And number one is Swan Bitcoin has IRAs set up. And there's probably other companies that also have IRAs set up. The issue with Swan is it's only Bitcoin. So you have to buy into that ethos. But then I do know of someone who does all the setups and all that sort of thing with the IRAs. And so if you are looking for more information, write me a message, send me a question, and I can get you more information. If you're looking to straighten out your mess because you messed up, you should probably reach out to me, and have a good week.
If you have any questions or topics you'd like me to cover, drop them in the comments below. Don't forget to subscribe so you don't miss out on any future updates, and here's to a less taxing crypto journey.